We're going to be prepping for CPI the capital hungry way, powered by market. This inflation report is crucial as it's the final look before the Fed's interest rate decision next week, and this report will set the tone for how many cuts we could see this year. So let's break it down into three main scenarios.
Scenario 1. CPI comes out in line with forecast, around 2.8% or 2.9%. Now this is the neutral case, probably with the smallest lower time frame reaction, but this keeps inflation risk sticky, keeping the Feds cautious. Dollar can see some short-term upside or pullbacks, but hold the downside with neutral print. Risk assets could see initial upside move by the neutral print, but expect any rally to be capped as inflation is still sticky and rate cut bets beyond September may decrease. Gold will see some initial whipsaws, but depending on pricing, it will provide some brief pullbacks for better buy zones around the 3600s. But keep in mind the priced-in effect, which can set the stage for a larger pullback after the recent strong upside.
Scenario 2 is CPI hotter than the forecast of 2.9%, and this will further complicate things for the Feds. Dollar demand will pick up in the short term, seeing pullbacks to the rough 98s. Risk assets can see larger pullbacks, especially from these highs. Watch US 30 breaking back below the 45K level. And gold can see deeper pullbacks, especially after this huge upside momentum that we've been holding before buyers step back in from lower demanded prices. But keep in mind, markets may start to price in stagflation risk, which is higher inflation plus weaker growth. Yields can remain elevated as investors demand a higher risk premium, with the US dollar seeing downside as US confidence drops.
Scenario 3. CPI comes out cooler than forecast, around 2.7% or lower. Alongside the September cut, this would boost more cuts later in the year, especially if CPI comes out lower than the previous readings at 2.7%. The labor market is already showing signs of weak growth, and with a soft CPI report, it can give the Fed's confidence to kickstart consecutive cuts. The dollar could sink into the 96, 97s, risk assets push into new highs on rate cut optimism, like the Dow Jones moving into the 46,000. And gold continues to stay bullish, but be cautious as we have seen huge upside.
Now, personally, I'm leaning towards a neutral print at like 2.8, 2.9%, as energy prices have remained subdued. But of course, I'm remaining adaptive. If I'm wrong, I want to be ready. And that's exactly where market comes in, because each scenario is mapped out with real-time analysis and updates. So don't trade blind and get your CPI coverage today at marketedge.ai.